This past week, monthly labour force numbers were released by Statistics Canada. The labour force survey provides a snapshot of the overall health of the job market in Canada. The two most important indicators are the total jobs created and the unemployment rate. Last month, 11,000 jobs were created in Alberta, and the provincial unemployment rate now stands at 4.9%. Tied for the lowest in Canada was Saskatchewan. To put that into context, it has been 3 years since Alberta's unemployment rate was consistently below 5%. Calgary's unemployment rate is also near a 3-year low at 5.1%. In contrast, Ontario's unemployment rate increased 0.4 percentage points to 7.8%, and the Canadian unemployment rate now sits at 7.3%. Alberta's unemployment numbers are expected to stay low for the foreseeable future, and businesses will be increasingly challenged to attract and retain talent in this market. To stay competitive, employers will need to prioritize hiring for talent and investing in the workforce. Youth unemployment continues to be relatively high at 13.9% in Canada, which could be a potential source of labour for Calgary business. Similarly, Calgary businesses should consider recruiting from other regions in Canada where unemployment rates are comparatively higher. Finding solutions to reduce long-term labour dependence in this province will be critical to our economic success. Also this past week, monthly building permit numbers were released by Statistics Canada. Building permits are a good indication of how confident businesses are in the economy. The higher the building permits, the more the economic activity. For Calgary, construction numbers are good. Total building permits increased by 20% over last year, and this is a big figure as the numbers last year included the airport expansion project. If we just look at the commercial and residential construction, there was a 48% increase for the last 12 months. In particular, the residential market is the strongest we've seen in over 2 years. If businesses are looking to hire staff and attract talent to the city, the residential numbers mean more housing choice and affordability. There's going to be more availability in the market, which will in turn keep prices down. On the commercial side, if businesses are looking to expand operations and need office space, there should be more commercial properties built in the coming years. However, downtown vacancy rates will continue to be high for the foreseeable future. If this is the case, businesses should consider suburban locations, as these can be built faster and generally have more vacancy. In the construction sector, competition for labor will be strong, putting upward pressure on wages. During the recent election in Greece, voters sent a clear message that they're tired of the austerity measures in that country by failing to deliver a parliamentary majority. A fringe political party has been unable to form a coalition government, which may mean another election in June. However, time is not on Greece's side. Greece needs to push through another round of spending cuts next month to qualify for the aid installment package from the European Union it needs to avoid bankruptcy. If Greece goes bankrupt, it will have an impact on the financial markets across Europe and the United States and could seriously hurt the global economic recovery. In the short term, events such as these tend to create turmoil in the financial markets, but it is unclear at this point what the long-term impact will be. Calgary is showing signs of positive economic growth, which we expect will continue into the foreseeable future. However, if things in Greece do move in a worst-case scenario, there is the possibility that the linkages in the financial system could cause a downturn across Europe, which could have a trickle-down effect in Canada, similar to what we saw in 2008. The European Union acknowledges this, and there are signs that they are changing the mindset from trying to fix Greece to trying to contain Greece in order to minimize the effects on other countries and the global financial market.